Hello, traders. It's 8:01 a.m. Chicago time, 9:01 Eastern, on Thursday, the 13th of August, 2018. I know I'm sounding like a broken record every morning, but that's what trading is. It's about routine, repetition, following the plan. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, the market sentiment is, again, mixed. In fact, it's off of most indices are off of settlement. Not seeing a single index that's above zero. The leader this morning is crude, approaching $70. In fact, it got to $70.08 overnight. Currently trading $69.96 right at the century figure. Up 0.66%. Crude's been moving steadily upwards. Followed by the Bund, up 59 ticks, which is a fair amount for the Bund. The laggard today is the Euro stocks and the DAX, followed by the small caps. The Russell's off 4.2 points or 24 basis points, and so on. Yesterday, the market opened up in balance in the indices, in the S&P, and then broke balance to the upside and turned into a trend day after a very, very, very tightly wound up day on Tuesday, as we discussed yesterday. So balance leads to imbalance, and so yesterday came. Let's take a look at what could interrupt our auction today. There really isn't anything on deck today. All that is going to be released was released, I believe. Oh, hang on. Need to update this calendar page. Come on. That's still true. Pretty much everything that needed to come out has come out. We had initial jobless claims, personal income, PCE core. We also had German CPI year on year. We had German unemployment and import prices overnight. So not much more on deck, so we're not expecting any interruption news-wise, or at least scheduled. Who knows who's going to be tweeting to whom this morning. Moving on to yesterday's expectations. Primary scenario yesterday is exactly what we got. Consolidation. A tight consolidation imbalance that ultimately breaks, and the goal was a modest 29.0850. We got a lot higher than that. That's scenario one right here. This is what actually took place. Look at that. Almost the same, except it really shot through. So there's the consolidation, there's the break to 29.0850, and that's pretty much where my plan ends. And then the market continued to seek higher prices. The stock zone band that you see there is for today. It did not exist yesterday, so it doesn't look like the high was projected yesterday. The next projected level for me is way up at 29.2575, unless we get a little bit more structure. There's nothing for me to project, and there are no auction-based levels, volume profile-based levels for me to look back to put stock zones up. However, we did leave a couple of singles yesterday, single prints yesterday in the 29.03 area, 29.05 area. And those are shown here. So we have a tight set of bands between 29.05, 29.03, and 29.08 for this morning. The low is 29.07. So we are trading right here below yesterday's closing swing low. And so it's looking like we have a little bit of resistance above 29.15 is the point of control. Carrying that narrative or story forward into the overnight session, we reopen, we make a very weak attempt higher. Now, the point of control is near highs. So conventional wisdom says that the auction probably didn't finish, and it's likely to at least tease or take out this 29.1750, and it didn't. But instead, it pushed to 29.16 quarter, a whole 5 ticks below. And then it started a trend down. Notice we're below mid right here. We're below mid, and we remain below mid all throughout until just recently. So it looks heavy to me. This morning, it looks like it's likely to explore 29.05 and 29.03 this morning. So my bias is to the downside initially. Very simple. Just read the story. So what's expected today? All right. Today, the expectation, we're opening right at the key LVN from yesterday, expecting a little bit of turbulence in this area here. Overall, expecting an open auction that resolves itself upwards, retests at least the opening swing, the closing swing low, right in this 29.1350 area. And then I'm looking for an impulse down that brings us to 29.05, 29.05 quarter, and 29.03. And potentially we could retest this low for a pop into the close, or it might just be an inside day, rest day. Remember, yesterday was a trend day. We're more likely to get a balanced day today, statistically, by a fair margin, than to continue on a trend. Although we've seen that broken over the last week or so. So that's the primary. That's the primary scenario. Secondary, open auction that attempts to push through immediately, gets tangled up in here, impulses up, pushes to the point of control for consolidation, and then finishes the job. Remember yesterday, the point of control is in the upper quartile. On a trend day, we expect this high to be taken out, pushes it, and then sits sideways or potentially continues higher. In either case, there's nothing I can do to initiate a trade up there. So those are the two key scenarios. The reason I expect a consolidation at the open like we did yesterday is because, as I said yesterday, we had a very coiled up day on Wednesday. Let's remark this. Very coiled up day on Tuesday. We had the prior high, green, the point of control, blue. We had VWAP, cyan. We had the prior day's close, orange. And we had the point of control, maroon, all at the same price. And so we had this tight consolidation right here. And the market was opening in that area, in that balance. And so with a tight balance and opening imbalance in the, at a century figure area, what's likely to happen is that there's likely to be interest. There's an argument. So think of it this way from an auction perspective, and that's really what I want to instill in all traders that listen. From an auction perspective, you got to look at what is the incentive for both sides here, for buyers or sellers. So with that, when you're in balance at a century figure with that tight a confluence of balance elements, there's likely to be a strong incentive for sellers and for buyers to be active. If sellers and buyers are active, then you get chop. And so that's exactly what we get, right? But then when it resolves itself, and because those sellers and buyers are active and balanced, there are going to likely be many, many people who are wrong, and that creates the imbalance, right? Then the market pushes, and then those people who are short in that balance, who've traded a lot in that area, start to buy because they have to stop out. And then as they buy, it triggers more people whose stops are above to buy, and then systems start kicking in and seeing the trend, and they start to buy. Like I'll buy on a trend breakout and imbalance like yesterday. So I'll help that along, and you'll help that along if you're on the trend, not fading it, and so on and so forth. And then the number of participants doing that cause the quick move out of balance. So that answers the question, why or when do you expect a consolidation like yesterday? Anyway, I'll leave you with that tidbit of education. There's not much more I can talk about. Let's make this short and sweet. Good luck today. Take care.